Your governor just got caught lying on national television, and the lie was so bad, PolitiFact gave him a mostly false rating. His exact words on CNBC: "Citizens property insurance is not solvent. We can't have millions of people on that because if a storm hits, it's going to cause problems for the state." The truth? Citizens has a $5 billion surplus, expected to grow to $6.3 billion by end of 2024. $17.8 billion in total reserves. Insolvency means a company cannot pay its bills today. Citizens can. So why would Governor DeSantis lie about the state's insurer of last resort being insolvent? Because he needs to justify forcing hundreds of thousands of Floridians out of affordable citizens coverage and into private insurers that charge triple the price and deny 75% of claims. Private insurers that donated nearly $1 million to Republican politicians. Private insurers run by hedge funds and executives from bankrupt companies. All while DeSantis claims his historic reforms are fixing Florida's insurance crisis. And in the next 7 minutes, you're going to discover how Florida's governor took a $2 billion taxpayer fund meant to help homeowners and gave it to insurance companies instead. How he's forcing policyholders to pay 2.5 times more for worse coverage through a depopulation scheme designed by insurance industry lobbyists. And why 17 different insurers declared insolvency within 1 year of receiving A ratings from a ratings agency that gets paid by the insurers it rates. This isn't insurance reform. This is a government-sanctioned scam, and DeSantis is panicking because the whole scheme is collapsing. Let me take you back to 2019. Florida homeowners insurance averaged about $2,000 per year, high compared to other states, but manageable. Citizens property insurance had 419,000 policies. The private market was stable. Major carriers like State Farm, Allstate, Progressive, they were all writing policies across the state. Then the hurricanes came. Hurricane Irma, Hurricane Michael, and the litigation explosion. Contractors going door to door after storms, convincing homeowners to file inflated claims. Attorneys filing tens of thousands of lawsuits against insurers using Florida's one-way attorney fee law. Insurance companies hemorrhaging money on frivolous litigation, not just storm damage. By 2023, the exodus began. Farmers insurance pulled out, affecting 100,000 policies. State Farm stopped issuing new homeowners and commercial policies. Allstate scaled back by 20% and stopped writing new policies. Progressive and AAA reduced coverage availability. USSAA ceased writing new policies in high-risk areas. And between 2020 and 2023, at least 6 insurance companies went completely insolvent: United Property and Casualty, Southern Fidelity, Weston Property and Casualty, Avatar Property and Casualty, FedNet, all gone. 170,000 policies transferred or abandoned. Homeowners left scrambling. So where did those homeowners go? Citizens, the state-backed insurer of last resort. By October 2023, Citizens had 1.4 million policies, 3 times more than 2019, and it was growing by 30 to 40,000 new customers every single month. So on December 16, 2022, fresh off his re-election landslide, Governor Ron DeSantis signed what he called historic reforms to fix Florida's insurance crisis, Senate Bill 2A. He promised it would lead to more stability, competition, and choice. Here's your dopamine gap. You expected DeSantis' reforms to help homeowners, lower premiums, more options, better coverage. But reality? Premiums are now $6,000 per year, triple the national average. Major insurers are still leaving, and new insurers approved by the state are denying 75% of claims while charging homeowners 2.5 times what Citizens charges. The reforms didn't fix anything. They made it worse, on purpose. Let's talk about what DeSantis' historic reforms actually did, because it wasn't help homeowners, it was bail out insurance companies. The December 2022 legislation created a $2 billion reinsurance to assist policyholders program. Sounds great, right? Help policyholders? Except that money doesn't go to policyholders, it goes to insurance companies to buy reinsurance. It's a taxpayer-financed bailout for the industry. The Orlando Sentinel exposed it. Florida insurance firms, not homeowners, reap benefit of $2 billion taxpayer-financed fund. And what happened after DeSantis' reforms? According to the American Prospects analysis, Florida's property insurance playbook has homeowners paying more for less, while insurers rake in exceptional profits from soaring premiums. Insurance costs have risen from $1,999 in 2019 when DeSantis was sworn in to a current average of $6,000 according to recent data. That's a 200% increase under DeSantis' watch, and he calls this success? But the real scandal isn't just the taxpayer bailout, it's what DeSantis is doing to Citizens policyholders right now. Meet Mike Bassett, a Florida homeowner with Citizens Property Insurance. In 2023, he got a quote from Slide Insurance, a private company. Slide wanted $3,200 annually. Citizens wanted $1,300. Bassett chose Citizens, obviously. 8 months later, Bassett is being forced into Slide anyway, not because Slide lowered its prices, because Citizens, run by political appointees of Governor DeSantis, raised its own prices so steeply that Bassett no longer had a choice. Bassett's words? There seems to be some collusion between Citizens and Slide. This seems slimy. And he's right, because here's what nobody's telling you about Florida's insurance reforms. The 2022 law requires Citizens to force policyholders into private insurance if that insurer's premium is within 20% of Citizens' quote. So Citizens can't just be cheaper, it has to be 20% cheaper. And if it's not, you're getting kicked off Citizens whether you like it or not. But here's the scheme. Citizens keeps raising its own rates to make private insurers look competitive. By February 2025, DeSantis announced Citizens would reduce rates by 5.6%. Sounds good, until you realize this was after years of massive increases that made private insurers seem reasonable by comparison. From October 2023 to November 2025, Citizens went from 1.4 million policies to 439,079. That's over 900,000 Floridians forced out of affordable coverage into private insurers that charge more and pay out less. But here's where it gets truly corrupt. Slide Insurance, the company forcing Mike Bassett to pay 2.5 times more. According to Seeking Rent's review of campaign contributions, Slide has donated $961,000 to Florida politicians and political parties since being founded in 2022. Almost all of it went to Republicans, $245,000 to the Republican Party of Florida, $210,000 to a fund controlled by GOP state Senate leaders. And Florida Chief Financial Officer Jimmy Patronis, he took $150,000 from Slide through his political committees. Patronis oversees insurance regulation in Florida. He took $150,000 from an insurance company, and now that company is being approved to take over hundreds of thousands of Citizens policies at inflated prices. According to state records, Slide was given permission to pull as many as 110,000 policies out of Citizens in 2024 alone. No other insurer was approved for more than 65,000 policies. Coincidence or legalized bribery? But the corruption goes deeper. Because how do these sketchy new insurers get approved to take over Citizens' policies? Through a ratings agency called Demotech. Demotech is a privately held company that gets paid by the insurers it rates. And according to the Wall Street Journal, insurers rated by Demotech were 30 times more likely to become insolvent than evaluated by major ratings agencies like AM Best or S&P. Between 2017 and 2025, 17 insurers declared insolvency within 1 year of receiving A ratings from Demotech. 17. Take People's Trust Insurance Company. Demotech gave them a positive rating. In 2024, People's Trust denied 75% of all claims filed by policyholders. 3 out of every 4 claims denied. Slide Insurance, the company extracting campaign donations from Republican politicians, it closed a little over half of homeowners' claims without payment in 2024. Demotech gives Slide an A rating, but Weiss Ratings, an independent agency, gives Slide a C-. 8 other Florida insurers either have higher ratings from Demotech than independent agencies or don't have any independent ratings at all. And DeSantis approved all of them to take over Citizens policies. So now we understand why DeSantis lied on CNBC. He said Citizens is not solvent because he needs political cover for forcing Floridians into worse insurance. If Citizens is stable and solvent, why force people out? Why make them pay triple? But if Citizens is insolvent and going to cause problems for the state, then DeSantis can justify the depopulation scheme as protecting taxpayers. But his lie triggered a federal investigation. Senator Sheldon Whitehouse, chair of the Senate Budget Committee, sent a letter to Citizens in November 2023 beginning an investigation in light of the state's acknowledgement of Citizens' potential insolvency. Whitehouse outlined the implications: financial problems for Florida's insurance market, massive costs for state taxpayers, and the potential need for a federal bailout
if Citizens collapses. DeSantis' lie might just have put Florida on the hook for a federal bailout, all to justify a depopulation scheme benefiting insurance companies that donated nearly $1 million to his party.
So here's where we are. Governor Ron DeSantis promised historic reforms to fix Florida's insurance crisis. Instead, he gave insurance companies a $2 billion taxpayer bailout. He eliminated consumer protections. He forced hundreds of thousands of Floridians out of affordable Citizens coverage into private insurers that charge triple and deny 75% of claims. Those private insurers donated $961,000 to Republican politicians. CFO Petronas took $150,000 from Slide Insurance, then approved Slide to take over 110,000 Citizens policies. Insurers get rated A by an agency they pay, then go insolvent within a year. 17 times this has happened since 2017. And homeowners like Mike Bassett are being forced to pay 2.5 times more for worse coverage, while DeSantis claims the market is stabilizing. Florida homeowners now pay an average of $6,000 per year for insurance, triple the national average, up from $1,989 when DeSantis took office. That's a 200% increase in 6 years. And when DeSantis went on CNBC to justify this scheme by claiming Citizens was not solvent, he got fact-checked and rated mostly false by PolitiFact, because Citizens has a $5 billion surplus growing to $6.3 billion. It's not insolvent. It never was. DeSantis lied, and he got caught. And now a Senate investigation is examining whether Florida will need a federal bailout when this entire corrupt scheme collapses. The insurance companies aren't abandoning Florida because of hurricanes. They're abandoning it because DeSantis created a system where sketchy, undercapitalized insurers can charge whatever they want, deny most claims, donate to politicians, and walk away when they go bankrupt. That's not reform. That's a protection racket. And Florida homeowners are paying the price.